All right, guys, we're back here for another day in the life video. Today's day in the life is a day in the life at the New York Stock Exchange. We've been traveling everywhere, Miami, Jersey, now here in New York. We're gonna show you what it's like to be inside the New York Stock Exchange, what the traders actually do in here, and if we're lucky, we're gonna talk to the Citadel booth to find out how they handle retail flow and all the other crazy stuff. So you guys have to be in the market at all times, right?
Here, yeah.
What was it like last year with the tariffs? So come along with us. All right, guys, here is the waiting area of the New York Stock Exchange. These are all gifts from other companies. So this is a bull donated from Circle, which is the same company that does USDC, which is the stable coin. We got the gavel, the bull, the bear. This is one of my favorites here, space. And then, yeah, there's a bunch of different historical stuff, which we'll get through. IONQ. You know what IONQ is, right, George? It's a quantum stock. We don't trade quantum stocks here. So, dude, my favorite one is actually right there. When we go inside, we're gonna see it. It is a gift from Ferrari. So Ferrari is publicly listed as RACE, R-A-C-E, and they donate like a little mini Ferrari car there. So this is like the waiting area. So there is an IPO today. It's the SK Hynix IPO, which is a memory name.
That's why I can't buy a freaking hard drive, huh?
So how much of your hard drives gone up, George?
Like literally 400%.
If George put the money that he did into his photo hard drives into the stock, he wouldn't be here shooting, he'd be in Turks and Caicos right now. So what do we have here? I know this is from Ferrari, but which one is?
For Ferrari, they actually made that in the Ferrari factory. Like it's like a real scaled
like a scalable
for Ferrari. This is really interesting. They just put this out there. This is from the Bank of New York, where Alexander Hamilton's co-founder of that bank. And it's actually, his name's listed on the list over here, like right in the middle there, Alex Hamilton.
That is cool.
Great.
So it's 9:05 right now. Market opens up in 25 minutes. You can see CNBC recording live. So that's where Harry called Jim Cramer, Yo Jim, instead of calling him Mr. Cramer. He has a lifetime ban from the New York Stock Exchange, so you won't be seeing him here again.
This is one of my favorite things in the exchanges. The 1980s men's Olympic hockey teams signed that. This is something that I just kind of like breeze through, but it's like the evolution of the stock exchange, where it's like, this is like the 1920s, right? And here's the New York Stock Exchange here. All the big blue chip names traded in there, and then everything else traded out in the street. So these guys, people would be out in the street all day, every day, making trades. They called this the curb. Later, these people moved to their own building, and then much later on, it was acquired by the New York Stock Exchange. The curb is the nickname for the American Options Exchange, which is on the other side of the floor. When we first walked in, we saw them trading over there. Tons of people. And there's like 5,000 people that were like shoulder to shoulder trading in there every single day. They did have one thing that was, you know those like pneumatic tubes? If you go to like the bank and it shoots up things. So they had that system in here at one point, and they had the concept of like fair access from a latency standpoint. So it didn't matter like if you were here or here, and if the DMM was like over there. From a latency perspective, it was equalized, so it will come at the same time. So that was something that we still employ today in our data centers. And then this is like the late 70s, where you start seeing these technology coming in, those big green screens and stuff. I don't know if any of you've seen the old movie, Wall Street. So it was like still chaotic down there and crazy, and a lot of people, but they start seeing that technology come in there. So I'll take you guys out here.
All right, so this is the moment last time where we were looking down and someone's like, where's Harry? The thing is, you have to be escorted by that guy everywhere you go, right? So we're all here, we're all taking photos, we're all having a good time. We're like, where's Harry? We're looking like right down there. And Harry's like this, just walking around like this. And we're like, yo, because the problem is he can't come up without an escort and we can't go down without an escort. So we stopped taking photos, we grabbed him, and that's when we started to realize that there was some trouble happening with Harry. And if you look there with all the MAGA hats, that's where he ended up. That was a Trump booth. We'll pop up a photo from the last vlog of what happened so you can see. And yeah, we got about, let's see, 15 minutes until the market opens. Started to fill up pretty crazy here. And yeah, look at this. Did you get the ceilings, George? Did you see how crazy these ceilings are? All right, market just opened up here. See, I don't know if anything's really moving like crazy. At least it's a somewhat green day in the market, so that's all right. But now I think we're gonna go off and start exploring a little bit. So we should be able to interview some of the guys at Citadel. It's too late for you guys to ask the questions, but I'm pretty excited to see what those guys are up to. My biggest question to all those people is, number one, is how do they even get into this business? And number two is, how do they move that much money so seamlessly, right? So I guess we'll find out. Thing is, when you come to the New York Stock Exchange, you expect these traders to be trading, actively hitting buttons, stressed out, pissed off, or anything it might be. But as you can probably see from the clip, these guys are eating yogurt, they got the tennis game on, they're on their iPhone, they're texting their side chick. Anything except trading is going on right here because everything is done through the robots and through the computers. So this is not what it used to be, 20, 30 years ago when people are yelling at each other, they're going crazy. Everything is robotic, everything is done on the computer. And if you look over there, George, that's the Goldman Sachs booth. It's empty. These are how things change over time. As active traders, as retail traders, we're hitting buttons, we're busy, we're doing things all day long. But this is where the real money is, dude. Eating yogurt, doing nothing, and getting paid to sit around. If I die and come back, I want to be like that guy.
I'm Peter Giotto. I manage the trading floor for Citadel Securities. It's my partner, Phil Finale. He co-manages the floor. He also trades some of our larger cap stocks, Boeing, Nike. We manage the entire risk for the trading floor. What that is for you guys, just to understand right now, we're responsible for around 64% of all the symbols traded on the floor of the New York Stock Exchange. I have 17 traders down here that are reporting to me. It's also 38% of the S&P 500, 60% of the Dow. Part of our function as a DMN, it's really three-pronged. Obviously, there's two exchanges where folks could list their shares right now, NASDAQ and the New York Stock. So it's a very interesting dynamic for us because we are the largest market maker on NASDAQ as well. But for Phil and I to continue to stay employed, companies that pick the New York Stock Exchange to list, we prefer them to pick us versus one of our competitors on the floor. Our two competitors on the floor are GTS and Verts. In the 10 years that we've been market makers as a DMN, we've been selected for around 90% of all the IPOs that have listed on the New York Stock Exchange. In the 10 years that we've been a DMM on the floor, we've done the largest transaction every year on the floor of New York Stock Exchange. We've done every direct listing, what's listed in for the New York Stock. Very Citadel, which you will get used to knowing. The question is why is that 90% and not 100%? Okay, that's a very Ken question. And the answer is largely a lot of times there's a pre-existing relationship where somebody decides they want to stay with somebody who they've had a relationship. But without sounding overly confident, we believe that in even playing field, from a data perspective with our capital, with the fact that we're 25% of all equity volume in the U.S., almost 40% of all the retail volume in the U.S. My balance sheet is 5 times larger than my two competitors on the floor. We believe that if you look at it from a completely data-driven aspect, it should be 100%. It's sometimes that the relationship piece still is very important in the markets. And then I'll let Phil kind of give you an overview of what these daily workflows are. But if you think about it, when I talk about New York and NASDAQ, okay? For us, again, remaining agnostic, what was the difference between the two models? And why would a company list on NASDAQ versus the New York Stock Exchange? So some of this you might know, but if you think about it, NASDAQ is built with the incentive of having folks to show up and provide it both. The rules, the way they're written, although this would never happen, we don't have to trade on NASDAQ until we want to trade on NASDAQ. Now, clearly, we're going to trade every symbol on NASDAQ. Like, to say that we're not going to trade SpaceX until we want to trade SpaceX, there's also absolutely no relationship from the market-making part of the business with the corp. Meaning that on the market-making part of the business, we don't talk to SpaceX about how much of the flow is being driven by retail, how much of the flow is being driven by option. We don't provide short color. We don't provide any of those services from a market-making guys. The other side of the house, clearly, there's a relationship. If you think about that model, for us as a business, a pretty good model to trade here. Come and go if you please. No service to your client, no obligation to step in time off. Now you segue to the New York Stock Exchange. New York Stock Exchange forces Phil and I to be in the market at all times with a buy and sell. Forces us to have a certain amount of volume on the bid and the offer many times, and requires us to service the corporate call. Again, knowing what you know sounds like an inverted model, correct? Citadel is not in an inverted model. So why are we in this business? The reason is all the exchanges compensate their market makers for their performance. So NASDAQ, low obligation, low service piece, virtually compensates us nothing as a market maker because they're giving us a pretty decent model to trade on as a market maker. New York Stock Exchange, all of these requirements compensates us here from a market making perspective. So from a revenue perspective, it's neutral. I always think it's important kind of to illustrate why we would be in a business that has that inverted model. The other piece, obviously, is the fact that it's the most visible commercially business that Citadel has. Ken sees our jackets on the floor every day, the logos every day, the opportunity for us to trade those 90% of the IPOs. Before I leave you guys with Phil for an overview, kind of for him to show you what kind of information we have on the floor that's accessible to us. You guys have any macro Citadel questions for me?
I have a question. So you guys have to be in the market at all times, right?
Here, yeah.
What was it like last year with the tariffs when the market just plunged down? So what is it like being involved in the market at all times when an event like that happens?
Yeah. No, so you guys are traders, so you guys get what I'm going to say here. It's just an opportunity that you certainly know you're never going to be right on the first opportunity. The idea is how right are you going to be on opportunity 2, 3, and 4? What gave us an advantage down here versus my competitors, to speak for this business, not Citadel as a whole, was my ability with that balance sheet. I could hold my positions much more. So if you think about the way the DMM model is built, okay? The exchange built it where when people want to sell, DMMs have to buy. People want to buy, DMMs have to sell when there's an absence of market makers. If the market is moving in one direction, okay, portfolio or not, think about 38% of the S&P 500. I'm going to be long, but there's no doubt I'm not going to be short in that situation from my role down here. My capital is less stressed than my competitors. They have to turn over there to keep meeting their obligation in the market of DMM. It causes more volatility.
Right.
Whereas we could hold those positions a little longer. So from a trading aspect, if you're asking just from a trading opportunity, I'll take tariffs every day of the week.
Right.
From a capacity standpoint, no issues, because the majority of what our traders are doing during the day is done on the opening and closing auction. Intraday, 99% of what they're doing is being done algorithmically, okay? So really the workflow intensity is pricing those auctions. And one thing I think you guys will agree on, the markets, in my opinion, are extremely efficient. I think the markets are phenomenal at pricing where things should trade. Where I don't think the markets are as efficient is on the auctions. And I think there's a tremendous amount of slippage that occurs on those auctions. I often tell people, so for a corporate to list here, like I trade to, okay, Uber pays more than what they would pay to list on NASDAQ. It's a more concierge model here, okay? And it kind of used the example, or not because I trade Spotify, that NASDAQ is Spotify with ads, and the New York Stock Exchange is Spotify treatment. And what I mean by that is, both experiences are phenomenal. You're going to enjoy both experiences. But when you have people over the house for a cookout and you're listening to music and you're hearing about a mattress ad while you're listening to music, or you're not listening to a mattress ad, if you care, great. If you don't, you have an option. The fact that there's competition in the markets is the greatest thing in the world. The idea is for me to make sure that I'm educating the issuer about what's there. So in those days, like during the tariffs, we have the ability to go back to an issuer and really tell them about how much capital we put into the market and how much difference we want to go trade.
Very interesting. We couldn't show a lot of the Citadel stuff for like compliance reasons, but the main thing that I got from there is that they love the meme stocks. They love the meme stocks because of the volatility. So it's actually very funny because you think, oh, these big traders are not trading meme stocks, it's just the retail guys. The biggest guys in the world, the Citadel guys, are trading the meme stocks, and they want more meme stocks, which is crazy. That's it, we saw this bull, now we're gonna go to the actual Wall Street bull, and then time for some lunch after that. Some unbelievable Delmonico steakhouse, bro. At 12 o'clock, bro, it's a dream come true. So here's the thing, man. Also, when you're making money like that, these businesses are not dumb. Right outside is the Rolex store to get yourself a new Rollie. Right over there is the Hermes store to get your wife a new Birkin. And if you lost money, right there is a souvenir store. So they got everything, bro. They got Rolex, Hermes, and souvenirs here. As soon as you make money, get out and pick your poison. Gift for you guys as memory. Now, like tradition, you have to come to the Wall Street Bull, take a photo with it. The front is where everyone takes a photo, but the good luck is in the back. You gotta grab the bull by the balls. So that's why the line in the back is even longer.
I like that actually.
That's awesome. Very cool. All right, we just finished up with the bull. Now we're gonna head to Stone Street to get some coffee, maybe some drinks, and then the steakhouse actually opens up in like 30 minutes. So we'll be the first ones in, get some nice steaks, and then that's pretty much it. I mean, this is kind of what it's like to be a day in the life in the New York Stock Exchange, you know? It's kind of a lot more quiet than people expect, but even then, these traders here are executing millions and millions of dollars while eating a parfait and watching the game. You know what I'm saying? Do it whatever you want and getting a steak at noon. Bro, it's hitting the spot. Cheers, fellas.
I don't like it.
All right, we just made it to my favorite steakhouse here in New York. Check this out, Delmonico's first one here. It's gonna be a great time. I hope you like it, cuz. So the bigger companies are the ones that I'm interested in because it takes a lot of cash to make money on those bigger companies, but with options, you could use more leverage and make more money. So if it's gold, oil, or silver, like which were some of the biggest plays this year, I should have used options, but I'm still trying to get the hang of it, so I'm monitoring, but not executing. But the next time it's gonna happen, I'm gonna execute.
So you're saying that on the riskier stock, options are not available?
Not even, doesn't exist. It only exists on the large cap stocks, yeah. Thanks to Cobra. Cheers to Cobra.
Thanks a lot, guys.
This is awesome.
Fantastic day.
All right, I don't know if you guys could tell, but I can't even see straight right now, dude. We just had an unbelievable steak. The porterhouse was incredible. Stuffed 3 bottles of wine. Now gonna head back to the hotel, take a nice nap, and call it a day. So if you guys like these types of videos, leave a like, leave a comment, subscribe to the channel, and we'll see you on the next one.